Sau đây, xin mời quý vị sẽ cùng đến với phần trình bày thứ hai với chủ đề trí tuệ nhân tạo trong ngành tài chính ngân hàng. Và phần chia sẻ này sẽ được gửi đến bởi ông Janos Barberis, top 35 Global Fintech Leader, nhà sáng lập kiêm giám đốc điều hành quỹ tăng tốc khởi nghiệp Fintech Supercharger. Và chúng ta cùng dành một tràng vỗ tay thật là lớn để chào đón lên sân khấu ông Janos Barberis. Now I would like to introduce Mr. Janos Barberis, top 35 Global Fintech Leader, founder and CEO Fintech Superchargers Accelerator. Please welcome.
Thank you very much. Good afternoon, good morning, everyone. It's a real pleasure to be able to be with you today for a couple of reasons. Vietnam is a little bit like home for me. I've been here quite a few times over the years, and I think today is a special day in the sense that we're talking about technology, and we're talking about how technology is changing finance. And so if you take it from this perspective, we already know that artificial intelligence is going to be one of the most transformative forces in the financial services industry. However, what I would like to do today is leave you with an answer. And that answer is, when will artificial intelligence transform the financial services industry? The reason why this matters is because if you look at the rate of technology, there's something called Amara's law. And Amara's law essentially says that we tend to overestimate the impact of technology on the short term, but we underestimate the impact of technology in the long run. And what it really means is that when you have something so disruptive as artificial intelligence, the question is, when will it become viable for a whole industry? And therefore, when do we look at this part here, which is the intersection of the application of the technology and the market impact? To do so, if you look at history, history is telling us one thing. Technology cycles are getting shorter and shorter. If you look at the financial services industry, it has seen many, many phases in terms of technology development. The first phase, which we used to call Fintech 1.0, was the era of the infrastructure, the telephone, the telegraph, being able to buy stocks all the way from London into the US without having to actually, for example, take a boat. The second phase of the industry is something that most of us can relate to, is technology in the financial services industry in the context of e-banking, the ATM. And then we had something that happened, 2007. Just about 10 years ago, two things major happened. The first thing was the financial crisis. But the second thing was the development of smartphones, whether it's iPhones or whether it's Android. And this gave another level of infrastructure for the distribution of financial services. And something interesting happened here. What happened in the West is different from what happened in emerging markets, such as Vietnam. In the West, fintech was very much about a reaction. The peer-to-peer industry developed itself because the banks could not lend anymore. But if you were looking at what the emerging markets were doing, they were seeing technology as a capacity of reforming a whole country. And whether it's Vietnam, whether it's China, whether it's Indonesia, or whether it's different countries within Africa, this is what we've seen. And now we are in 2018, and we are about to enter a brand new phase of financial technology. That new phase is going to be developed by artificial intelligence, blockchain, IoT, decentralized, and digital identities. So the first question I'm going to be asking you is, when should bank be digital ready? If you look at how long it used to take to build a bank, for them to reach 1 million users used to take centuries. If you look at what technology companies have been able to achieve, for them it only took decades. And when we started combining technology and the financial services industry, they've also done that only in decades. And therefore, now you can build brand new financial universal conglomerate in few years as opposed to hundreds of years. And Alibaba in China has shown us this. Ant Financial is now the 10th largest financial services company in the world in only 20 years. And therefore, when I've been asking you, when should a bank be digital ready? The answer is yesterday. If financial institutions have not understood that, this is already gone for them. But there's another level of technology companies and financial institutions that should ask themselves, when should I be AI ready? So a way for us to be able to do this is to first look at, well, does it actually matter within the financial services industry whether banks should be AI ready? And if you look at the investment in that space that has been done in the last 3 years, the financial services industry is by far the biggest spender in artificial intelligence. And there's a reason for that. What I'm going to do now is I'm going to be taking a few examples of how fintech companies using artificial intelligence have been able to reform the whole operation of banks. Artificial intelligence can be used in anti-money laundering, it can be used in auditing, and it can also be used in reporting. And I'm going to be showing you 2 demos of companies that have been doing this. It's not easy to summarize artificial intelligence in finance in less than a minute when that industry has really started itself over 70 years ago. But the first company that I'm going to be showing you is called vPhrase. So this is a typical website portal where you have financial information about any publicly traded company. And what we realize is that sometimes making sense of that amount of data rapidly is something which is very complicated. So the question now I have for you is, can you here tell me the performance of that specific bank within the next 30 seconds? And give me an insightful strategy on what to do next. What he did is simply copy-paste that URL, put in their artificial intelligence engine, and within a few seconds you have a brand new report about the financial performance of that company. In a minute, he was been able to do what an analyst would normally take a day. But that's not good enough. If you want to see cost save on the sense of artificial intelligence and the financial services industry, let's look at one more company. This company is called MindBridge. And what MindBridge does is they are applying AI in auditing. Auditing can be a very burdensome process because of the length of the documentation that you have, but also of the size of a company. And here what you do, you simply take your auditing files, you upload it, you drag and drop them. This is currently being processed. And what normally takes 3 weeks to do at an institution which is a conglomerate with offices in over 20 countries will now take, again, less than a minute. And what you'll be able to see in an instant is that engine has been able to identify where the suspicious transactions are. Almost there. And keep in mind that this is a product which is currently being used by financial institutions everywhere. Now, auditing is specific because the purpose of MindBridge is not to say where fraud is happening. Fraud is both the combination of an irregular pattern and an intent of fraud. Intention is not something, it's okay? Intention is not something that AI can actually infer. However, irregularity in patterns is something that AI can spot very easily. And essentially here, automatically, the report has been able to generate where the irregularities on the auditing file of that institution is, again, in less than a minute. 3 weeks of work summarized in a minute using AI. And so therefore, artificial intelligence is pretty simple. It makes things better, faster, stronger. And also the cost save is quite dramatic. But I would like you to pause here for a second. We've seen that technology is changing at a faster rate than it ever has. What used to take 100 years of an era is now only taking 10 years. We got to realize that financial institutions are spending the most money in artificial intelligence. And we've seen some of these examples. But again, for us to answer, when does it matter and when should we start strategizing, we need to pause and we need to think. First, we need to think about a strategy. Then we need to start working together, and only then can actually an institution start taking off and applying artificial intelligence. First, we need to change the mindset of financial institutions. A bank is not going to be defined anymore by the asset size it has. It's going to be defined about the data set it holds. Artificial intelligence will allow to move away from universal banks, where each of us has the same banking experience, to individual banks, where on the back of your personal data, the experience that you have is customized for you personally. And finally, because of the cost save of artificial intelligence, banking is not going to be something exclusive anymore. And here I'm not just talking about financial inclusion. I'm talking about the quality and the level of service that can be delivered to you as a customer. Being the top 10% of a client base is not anymore what's going to be defining the quality of services you receive. The second element is if you start looking at strategies around KYC and identity. There's really 3 different levels. Currently, there's one way, which is to onboard a customer, is using a passport. A passport is a piece of paper that does very little to actually define who you are. It is a government-issued document, but it only is a snapshot in terms of your identity. It's a static identity. It's not a dynamic identity. And therefore, if you try to apply artificial intelligence in a bank that has analog processes, you're going to go nowhere. Because the thing that will define artificial intelligence quality in a financial institution is the quality of the data that you have. And therefore, from that perspective, there's 2 more things that needs to be considered. You can either digitize a process, or you can either be a digital bank. It sounds a very small differentiation between those 2 words, but they actually have very strong meanings. Digitizing your process is going from a piece of passport to a scanned piece of passport. It's online, it's on the cloud, it's not paper-based anymore, but the amount of information that you have is very much the same. It just has been recorded in a different manner. A digital identity, on the other hand, is not just capturing who you are legally, but it's who you are on social media. It's who you are with your friend. It's who you are with who you call. It's who you are with when you shop. And the opportunity that is open to financial institutions on the back of building financial services and products using a digital identity as opposed to a digitized identity is something that we yet have to see. Currently, the majority of the industry is at that second step. It's about better banking. The same business model, more efficiently driven. But it's not yet about digital banking, where the way banks make money will be radically different. The strategy is also an important one. Having done Asia's most successful fintech accelerator in Hong Kong and Malaysia, we were often talked and asked by banks, how do I become more of a fintech company? And I think to some extent, the question is actually wrong. If you look at what's happening across Asia, which is a very unique set compared to what's happening in the US and what's happening in Europe, Asia is moving away from financial technology and more towards techfin. Technology groups that have quality of data, that have distribution size, and have financial resources are directly distributing financial services product themselves. Because really, from their perspective, the technology is now commoditized enough and the knowledge in that industry is commoditized enough for them to distribute it. Think about how e-commerce companies have now started becoming financial institutions. Alibaba becoming Ant Financial. Think about Grab entering the financial services industry in the insurance and the lending space. They are providing financial services to their customer base to provide a better experience. And the tech fins are the ones which are putting more pressure against the financial institutions because they have the same distribution size, if not more, as banks. However, what we start seeing is, especially in the context of China, it's techfin companies like Ant Financial saying, actually, you know what? I don't want to do the distribution of the financial product anymore. Even though I do not hold the risk on my books, I do not want to do it because I need to maintain a license. And when you are thinking about a world which is scalable, regulatory licenses and regulatory costs is one of the least scalable things that you can actually have. And if you think that data is the new oil, if you think that data is the new added value for you to improve the quality of services that you have, your game is how can I white label a technology to as many players as I can? How can I become an infrastructure as opposed to a service provider? And this is this whole move of tech companies just doing what they do best. They provide the infrastructure layer of the financial services industry, and on the back of this, they use the data and create better AI engines. So going back to it, when you start looking at it, artificial intelligence and the strategy of financial institution is something that is not often discussed. And the reason why banks don't want to discuss about their AI strategy, even though it's one of the sectors that has the most funding, is because if well implemented, artificial intelligence will give a bank a competitive advantage. And therefore, all of us in this room only get to see the top of the iceberg versus actually what is happening in the background. Which therefore leads me to the next point. What therefore should Vietnam do to create a successful fintech ecosystem and be a leader in the region? Having done that in Hong Kong, we had a chance to actually work with quite a lot of different people. Regulators, institutions, banks, startups, mentors, universities. And if I had to rebuild Supercharger one more time again, but focus on one group of people, I would actually focus on universities and education. The reason why I believe that Vietnam should build its future on the back of education about technology in the financial services industry is for a simple reason. We know what we don't know. And whatever I can say with as much authority that I can say, I would be ill-advised to tell you what the next 5 to 10 years are going to be looking like anywhere in the world, in any industry in the world. The reason is because what I've come to realize is that because technology cycles are shorter and shorter and shorter, when you knew where an industry was going for the next 100 years, this is not possible anymore. Today we talk about AI, but what about quantum computing in the next 5 years from now? Will it actually be even relevant, or something else will come after that? And this goes back into preparing people. In the 1980s, when someone would learn a skill, that skill would be valid for another 30 years. Today, if you learn something, the skill that you learn is only going to be valid for the next 4 years. So here is an issue. We are living in a world where technology is impacting society and industries at a faster rate than ever before. But at the same time, we're producing people that are lacking the skill to fully understand, adapt, and impact the market in which they operate. And it is our belief that able to change people's education, professional education, short-time education, is actually what is going to be enabling a whole country to be able to transform itself. Because if you were trying to think about large-scale education project at a university level, and if you get a policy wrong, you will only get to realize the impact of this in the next 20 years. And so therefore, we need to reform the way we think in terms of education, and we need to more privilege short-span education on the professional side. To some extent, you can actually see why that actually matters. Next to us is a conference organized by the World Economic Forum. If you look at the skill that the WEF said would be relevant 5 years ago, and if you look at the skill that they say would be relevant today, it has totally changed. In 5 years, a think tank which is pushing where the world should be in the future has changed the agenda of what people should learn. And it has not just reorganized those skills, it has added brand new ones. Perhaps if you look at a level that you can relate more, is whoever here is using LinkedIn, I think some of you must have realized that people are changing their capacity of being experts overnight. From one day, I will be a financial technology expert, and from the next day, I will be an artificial intelligence expert, and then I'm going to be a crypto expert. It means two things. Either that person is incredibly good at learning, or that person is fearing to miss out on the next technological trend. And so education and being able to prepare people for the future at the short term is what is actually going to be driving transformation of whole countries. And just like everything, sometimes technology doesn't work, which could be worse. but you need to explain what is in for the people to actually do it. Because transforming a country is not something that you cannot do without having the whole ecosystem and the whole stakeholders in place. First of all, why would university care about reforming themselves? Because university are in a very simple business. They're in the business of making sure that people are employable. And if you, as a university, are not able to produce that, people will not come to you anymore. Now, the regulators are also incredibly important. Because if they do not understand how technology is going to be changing the industry that they're supervising, they will slow down the path of technological progress. Uncertainty is not good if you want to build an industry at scale. But if you have regulators which are not ready for what it actually means to use artificial intelligence, how can you expect them to drive policies which will impact over 100 million people? The next one are startups. Startups need to know it because down the line, startups only have one advantage against corporates. They're smaller, they're more agile, and they're faster. If they did not stay faster and more agile, there's no point of actually being a startup. Because the corporates have larger distribution, larger resources, and more network. So the competitive advantage of a startup is knowledge, and quickly applying that knowledge in the business context. And finally, corporates. For corporates to stay competitive against the new technology group, again, it is for them to learn on how artificial intelligence is going to be transforming them. So what I've wanted to do with this presentation was the following. The first one was to answer, when do banks need to be digital ready? And the answer was yesterday. The second one is, when do financial institutions should be AI ready? And the answer is today. And the third one is, if you were to reform a whole market, how would you do it one more time? And I strongly believe that it's not financial capital that is going to be transforming Vietnam. It's human capital. And really, this concludes my talk about artificial intelligence and the financial services industry. Thank you very much for your time. And just before I will leave you, I would like to introduce one more video. FPT actually has been working on a blockchain project called AkaChain. And they're going to be showing you what AkaChain is all about. Thank you very much.
Vâng, kính thưa quý vị, và chúng ta sẽ cùng dành một tràng vỗ tay thật lớn nữa để mời trở lại sân khấu ông Janos cùng với giám đốc công nghệ FPT, ông Lê Hồng Việt sẽ lên sân khấu để gửi tặng một phần quà ngày hôm nay của chúng tôi với phần chia sẻ hết sức đặc biệt vừa rồi. Xin trân trọng cảm ơn ông. Thank you very much. Vâng, chúng ta cùng dành một tràng vỗ tay thật lớn nữa để cảm ơn ông Janos. Mr. Janos, can I ask you one question?
Sure.
Yes, I think the question many people in here want to know. Do you think AI is the next blockchain?
So I actually think they're very different.
Yes.
In the sense that when I was talking to you about technology and how AI drives a competitive advantage, blockchain is different. Blockchain is about getting people to work together. And I think blockchain creates value when you have a network effect.
Yes.
Artificial intelligence doesn't. Artificial intelligence at the firm level creates value just by itself. And so they're fundamentally different in terms of market dynamics. One is not the other and one is not going to replace the other because they serve totally different purposes.
Yes. Yes, thank you very much. Yes, thank you very much to stay here. Thank you, Mr. Janos. Yes. Và chúng ta cùng dành một tràng vỗ tay thật lớn nữa để cảm ơn Mr. Janos và ông Lê Hồng Việt.